Hi everyone, welcome to this panel. Today we are going to talk about Europe versus US in startup investments, the gaps, the opportunities, and the differences. I've been a founder in Asia, in Europe, and in the United States, and I've pitched in all three ecosystems. The reception, not just financially, but also culturally, has been different. Today, we are not going to discuss which one was better, because I genuinely don't know the answer, but we are going to discuss the difference between these ecosystems and what does it mean for the founders that are building today. We cannot compare these ecosystems one by one next to each other equally because these are two bets that are running parallel and one is not better than the other. But then it does make a difference, and we do see the difference every day in our startup ecosystem, and it does get reflected. So I'm joined today by three fantastic panelists, and I want to hear your angle. Name what you're doing and your angle for this conversation.
You want to start with me?
Yeah.
Hello, I'm Hedy. As said, I'm CEO and co-founder of an insurtech startup, Cache. So we cover everything in the urban mobility and flexible work, so everything that the legacy insurance companies struggle to invest. We are a good example of how to scale across Europe. It's incredibly complicated being a regulated company, and we get all the fantastic, I'd say, gifts every country gives us when it comes to gold plating of their regulations. So I'm going to cover that angle, but at the same time from a very positive side, as I also am sharing actively my example with the EU Commission today. So I'm actively participating in some of the initiatives around the startup scale-up strategy, EU Inc., which most of you have heard of, etc.
Thank you.
I continue. So I'm Henrik, co-founder of Causa Prima. We are a 12-week-old startup, so literally started early this year, and deliberately chose a US entity as the holding structure with two European subsidiaries here in Spain and one in Germany. I can share a bit why we chose that. I was running a fintech in Berlin before, heavily regulated for the last 8 years, and struggled a lot with the European bureaucracy and regulation as kind of the steroids of bureaucracy. And we wanted to just have much more flexibility now in the new venture. And yeah, I can share a bit the thinking behind it and what Europe can do to maybe next time actually set up the entities all here in Europe.
Yeah, hello everybody. My name is Martin Tanto. I'm a partner at Pegasus Tech Ventures. We're a global venture capital fund, but based in San Jose in California. We have $2 billion in assets under management, pretty generalist, invest in a lot of different verticals. But enough about Pegasus myself. I'm also going to be a little bit on the middle ground because I grew up in Germany. Now I'm like German-American, so I kind of have both perspectives. Try to compare, but that's what the panel all going to be about. So
Wonderful. And I am Astek Zakharyan, co-founder of SIA. We're working on the problem or the opportunity of activating high net worth individuals into becoming angel investors in Europe and in the United States. So this topic is something we are daily working with. So I'm happy to add bits of nuggets here and there. I want to get started with a number that makes a big difference. Europe and US have equal size economies, but in 2025, Europe invested only 22% of what US invested in the startup world. So my question is, where did the rest of the money go if they are equal economies?
Sure, go ahead. Good question. So where's the money? Where's the money? No, I mean, I think, and it's a good point, right? Two equal economies, but one, if I may say so, is doing better than the other one. If we're just comparing US and Europe, actually even, it's good that you said you created also a company in Asia, because we're a global venture capital firm. We don't just look at Europe versus US, there are so many great ecosystems out there. And actually we have a lot of investments in Asia as well, and dealing a lot with the ecosystems there. And by the way, the Asian perspective is also interesting in that because I've met a lot of Asian investors and Asian startups who said, oh, I'm going to have a difficulty actually entering the European market because of regulatory issues, because of GDPR and so on. But back to the question, I mean, where did the money go, or where's the money going? I think it's due to cultural differences in, for example, risk aversity. It is just not going enough into venture capital, into startups, in whatever way is invested in startups, and more in real estate and bond and stock market and maybe savings account, because if I talk about my own country, Germany, I think we have one of the highest savings account ratios in Europe, in the world, I don't know, but too high was a very low income, right? But then that question is also, what are the expected returns on it, right? Because as an investor, I want to get a return, right? So I shouldn't be investing in savings account. I think we probably probably all agree on that. But it is also down to all of us, to the ecosystem, to also prove that the returns can be good if you're investing in startups.
So
and that's a duty for all of us.
Yeah, absolutely. And you're right to point it out. It is a lot more in real estate in Europe than it's in the US. I was looking at the numbers, and it is a lot more in regulated bonds or retirement funds and so on, which are, in US I was looking that a lot of the retirement funds do follow venture capital, but here they are regulated not to take such risks.
Exactly.
So do you guys think, is this a cultural, is this an awareness issue? Why is it going into one direction and not the other?
Well, I think there are a multitude of reasons, but in general, I would like to still pinpoint probably the mindset question is number one. So meaning just general risk, taking risk is not thought of the same way as in US. So if you take also our large enterprises, how many startups a European large enterprises buy versus US? It's significantly lower as well. So I used to work in a large bank, so I kind of know the mindset of it. So if you go around in the market, you look, okay, I'm going to kill this one, I'm going to copy this one, and I'm going to partner up maybe with that one. But that's the kind of first attitude, unfortunately, still. There is lots of talk about innovation and everything, but this is kind of end of the day, it comes down to the balance sheet. Okay, can I do it faster myself? Can I do it cheaper myself? US, what I've seen and is mainly, they think globally, okay, I'll buy that, so I'll try to integrate fast and I run. I try to take global approach and things. And I think that kind of mindset doesn't exist. I was just half a year ago in there's one organization that brings together the big corp, startup leaders, and then also more digitalized countries in Europe. And to be honest, I really expected to see on the slide of their strategy for the larger corporations that, given everything that surrounds us, that there is, we're gonna take and dominate in this segment globally. We're gonna, make sure AI is implemented fast. Something. So no, we're talking about cross-border collaboration. We talk about digitalization in the large corporation side. I think that's where the big gap is. The kind of speed of running and the ambition is low, and that's what really comes down to then startups, and that's where the mindset problem really kicks in.
Thank you for diving so deep and detailed into it. I really appreciate it. And you mentioned mindsets. I want to come back to Henrik. You just commented, you just raised funds. Congratulations on that. What is going on in the minds of a high net worth European individual's mind when they are choosing not to be in the world of startups, not to be an angel investor? Why? What's holding them back?
Yeah, I think I just came back from a week in San Francisco, and one thing became very clear. That we had a conversation with an investor, and it's this mindset that in the US, especially in San Francisco, I think it's a special place, but everyone kind of thinks, what if everything goes right? So that's kind of the mindset when you think of vision, when you think of potential, of changing the world. And in Germany, Europe, I think it's very often exactly the opposite. What can go wrong, right? And that's kind of how everything navigates. And again, working with regulators for almost a decade, the amount of how they look at things that can go wrong, and I mean, it's partly their job, but if you then entirely forget that innovation is actually helping with competition and it's helping with us as consumers to better products, you don't get there if you only think about what can go wrong, right? And I think on the high net worth individuals, etc., who rather invest into the next office building or residential investment in real estate. Well, nothing can go wrong with that, right? Like, I mean, that's nice return. It's very, very plannable. But I think what they are like really ignoring is like the 100x potential if everything goes right? And I think that's a bit the mentality that we need to try to change here. But it's not only in the mindsets. I think the combination is also it's tax breaks. Like the US is much more friendly, qualified small business stock where you actually help investors with tax breaks until the real liquidity comes. Try to give real stock options in Europe to your employees, right? Like you have to create phantom shares, virtual shares.
That's in Germany, sorry.
It's in Germany, but in Spain, I'm trying to do this right now as we speak here. It's also pretty much a headache. And that is, again, kind of risk avoidance. You don't want to create or give stocks to people who maybe supposedly cannot handle it or whatever the reason is. But what if everything goes right? Like these companies are going to make hundreds of employees to millionaires if they really expand to the unicorns that they're trying to be, right? Like, so it's a bit that mindset that I don't understand, and that will take a long time to break.
I'm glad you don't, so that we keep fighting that. So thank you for that. And there is I would call it a lazy story to tell, which is Europe is behind, Europe needs to catch up, or Europe needs to try to be more like San Francisco, maybe to some degree. But I just don't want to go there, and I don't want to take that as a story and accept it. So I want to take it to what is it that Europe is building on the infrastructure level, on the quality of startups, on the characteristics that perhaps is an advantageous situation.
Mm-hmm. So I think most of you have heard the JUN. So I come from Estonia, but that's why I had to jump in on the German comment, because for us, we have that, what you are dreaming of. And it's there, it exists, there's no questions about it. So maybe on that comment, Europe is very diverse, and lots of discussions when something is negative has been put on all Europe, but actually half of Europe don't have the issue on these things. And that's why it's always generalized. So everything negative is always generalized, everything positive is left. So I think if you talk about the infrastructure, so there are a couple of structural things. One is exactly the single market. You know, what I explained from my experience as scaling my company Cachet, there are lots of fractions, and the fractions are not dictated by European Commission or the EU institutions. Lots of those fractions are actually created by the member state themselves. So if you have, let's say, regulation GDPR, that's washed through all the Europe, but if you have different directives, which is something that, you know, in my field, it's insurance directive, which has lots of additions every country has added, or exactly when we talk about everything with tax, Europe can't touch that. It's lots of local member state questions, so we need to unify that infrastructure as a whole. So if I'm, let's say, scaling from a small country to everywhere, I don't have to get surprises in Germany or in France where lots of things link together and actually make it very protectionistic of the market. So this is probably the most critical infrastructure to fix for all the startups. And maybe two more things. I think one big thing that has been changed, and this was announced actually this morning by Ursula von der Leyen, is there are quite big new tech sovereignty initiatives from EU level. So there is a quite an aggressive agenda that comes out in and hopefully this will support in like the AI level, the cloud level, and lots of the sovereignty that we actually need to create for enabling startups to work more on the European infrastructure. So.
Thank you. I love your answers. All right, do you guys have any points to bring that perhaps positions European startup ecosystem? Can you fight for, like, just make a case for it?
I mean, the talent is exceptional, obviously, right? Like, I mean, it's not that the US is any smarter than any of us, right? Like, I would even argue the opposite at times. But anyway, like, I think the talent is fantastic. Like, we have it all here. I mean, it's obviously it's a beautiful continent. Basically, the basis would be here. Like, if we were also to a lot of what Hedi just said, like, if we were to have, I was about to ask, which single market? There is no single market. Like, there's an idea of a single market, but then at the end, if you really look at it, it's not a single market.
Well, the EU Inc. is the first initiative to kind of really take that to next level for start.
Yeah, but I was running around with the EU Inc. head as well, trying to help with the merchandise and the initiative, but now I look how it's watered down to where it's now. It's so far away from going to Delaware, clicking on a button and having a entity in 24 hours.
Agreed. There's a cool,
That's not going to happen.
But there's
That's
a cool
just not gonna
nugget in
happen.
it. Can I just comment on that? If you take that's why I love the Germany, Estonia, and I'm just lucky to sit next to some Germans here. But the point is with EU Inc. that I agree it wasn't what the team really wanted. But what the Commission is doing today, they are putting companies to fight. If you've already seen some big campaigns from France and Germany, found in Germany. So countries like Estonia, who has a fantastic setup already existing with a tax schema, what the startups want with others, they will start to have a competitive advantage. And I agree, this is not exactly what the initial EU Inc. wanted, but the rest will be there. So it's more on the question of game is on. Let's see which country wins, and maybe that would motivate them to change some of the tax laws, like on the shares as well. So
Yeah, I'll bring that to you, if that's okay.
Can I jump in on a couple of other things? Just one thing. No, it's completely wrong. What you were saying in terms of like opportunities versus what can go wrong, what can go bad. When you're pitching VCs also. I give you our kind of investor perspective. And I think it makes it clearer in the sense of out of 10, 20, maybe 30 investments. It's fine if 9, 19, or 29 go wrong, as long as we have that one winner in there. Really, if you look at the numbers,
Absolutely.
These other investments that we done, a couple million here, a couple of million here, a couple of million here, that we lost. I mean, we don't have such a bad portfolio where there's 19 failures and only one. But even if there's one big winner, or we're talking about a big winner, a unicorn, decacorn, whatever.
Portfolio
pays
sharing.
for all the others.
Yes.
Pays for all the others. That's why we're looking at opportunities. And seeing the big picture and seeing how big can this go, right? That's what we want to invest in. That's what every investor wants to find. And in respect to the other conversation about Europe and where we're going, and I'm so happy that there's Estonia now that said, okay, let me do things a little bit different, coming also a little bit out of a different history, right? Germany, I say we, we're like still, the big elephant, still moving, but moving slowly. A country like Estonia had the opportunity to say, okay, no, guys, we'll do things different. And that's exactly the diversity that we have in Europe here. And I think it's the diversity in Europe that we're not cherishing enough. That's what the United States does not have. What they do have, though, in the United States is, at least until before that existing administration, it was the place to be for startup founders to go. So the idea was to bring everybody, the best people, the best startup founders, the best developers, the best designer, to the United States to build companies there.
Yes.
It might change, don't want to go into politics, but that is something that there was, but it wasn't that diverse diversity, like from a default, from a definition perspective, that you have countries between Estonia and Portugal, and everybody's a bit different, and it is often a disadvantage just by nature, because we have individual countries, and we all know about that in their different corporate laws, etc. But I think we should try to make it an advantage, and that advantage is diversity. Different cultures, different languages, different ideas, different history, etc.
I'll take that and add on top of that a bit of statistical reality, which is in 2025, so as of last year, there were 400 unicorns in Europe, which is 3 times more unicorns than there were in 2018. So European unicorns are growing. And another very interesting fact is that there used to be, let me just make sure I get the numbers right, the amount of venture capital that was built, that was raised in 2024 in one single year in Europe was more than in an entire decade from 2005 to 2014. So year by year, European startup scene is changing and growing and is not in the same place. But I'll add to that and take us to the next level, which is a number I'm not very comfortable with. 67 unicorns last year relocated from Europe to United States. So we are losing our unicorns to the United States. What are we doing? Can we do things to hold them back? Is it good that they are leaving? Where does the gap hurt the ecosystem, and what can be done about that? And you are one prime company built and based in United States.
Not quite there yet, but
yes,
with the ambition, of course. But I mean, why do they go? I mean, we talked about the access to capital, right? Like it's very clear. I remember when we raised our Series A, my former company was the biggest Series A at the time in Germany, $20 million. We couldn't raise it in Germany. Like we had to go to London already, which is like a bit more like this Anglo-Saxon. I think they're a bit closer to the US in their thinking. And it was very clear that if we were to go for a Series B, it would have to come from the US, right? So it was kind of this natural path, because we saw our US competitors, when we raised a Series A of 20 million, they raised a Series A of 50 million. When 3 months later they raised a Series B of 100 million. It was impossible within a 3-month window to go from Series A to Series B in 2021 in Europe. Like, was just unheard of. But in the US it happened, right? So I think that's just a bit the game. You see your competitors in the US with a lot of cash available. And then there's the big question also on the IPO. I mean, like, in which stock exchange do you want to IPO here in Europe? Like a big IPO. I'm talking tens of billions. It's just almost not an option, because again, we have like this very fragmented market. And in the US, like if you want to make a great IPO, you go to the US. It's as simple as that.
Yes.
It's an image thing, it's a reputation thing, and it's a liquidity thing.
And also, the reality is Europe is not becoming a single market anytime soon. We have 27 legal jurisdictions, we have 24 official languages, and that is going to keep getting on the way from that side. But I do want to then take it to the next direction, which is, what is it that we can offer that could potentially be a reason why unicorns could relocate to Europe or stay?
Well, I think I can just comment from two angles. So from the startup angle, myself, who has not yet went to US and hopefully will not, and also on the policy side. So I think primarily from the policy side, the question, there are currently big initiatives, because the main problem is the funding. So money, and if there is a big US investor comes in, then normally most of them need to flip, and I think that has been the case. So hopefully this is slightly changing. I don't know if you make your companies flip, who are Europe, when you invest in them with the US capital, but the primary question is really simplifying and making the pension money easier to invest into startup funds. I know that France, Germany, Sweden, Netherlands, they have already done big steps on country level to change that. And I hope that the new EU Scale-Up Fund, which was launched this week, will also support that, which is going to be now run by EQT, and let's see if that's going to help out. But all in all, what I commented earlier, and you picked it up as a kind of, there is no good exit opportunities. That's why I said that the big corporations, they need to pick up their ambition, buy and collaborate more with the startups, because that would be the fastest track to really scale and grow.
So, I mean, and we're almost getting to the end as well. So to the question, can you build great startups, scale-ups, successful startups in Europe? Absolutely. Anywhere in the world. In Europe, very well. And Heidi is a great example, right? Yeah, absolutely you can do that. The question is, and I think it's a fair question also from South Summit, from Astrid as well, what can Europe do better, right? Like, that you can already do it, this is great. It's actually a great question to ask, and we want to improve, right? And I think there are two areas of improvement. One is very difficult, that's culture, because that's all of us. How risk averse are we? Well, there's nobody saying, okay, let's all be more risk averse. I think it's a decade, it's a generational thing. It's our heritage, it's our history. Difficult to change, we can improve, right? But, And second is, what we can change is the whole regulation, corporate taxes, immigration law, corporate law, that we can change, a harmonization across the EU. And unfortunately, and that is my, point, is I think Europe is still going too slow on that. Sorry to say that. I've done my first startup in Europe in 1999, in Germany, later in 2007, one in Spain. That was very difficult back then. I know today it's easier, it's better, it's more harmonized, but the world's moving faster. And I mean, AI everywhere, right? It's not going to slow down, it's going to get much faster.
Yes.
And Europe, I think, really needs to get their stuff together now and make sure these elements that I mentioned before, legal, regulatory, etc., are solved.
Thank you. If I have to summarize what we discussed today, we do know that both ecosystems bring something unique and important to the system, and there is definitely room to participate more from European money side into the world of startups. As Heidi mentioned, that could be regulatory, that could be from pension funds. But I also like a topic that we are working personally and professionally also is activating private investors, high net worth individuals into the conversation of angel investing. So I'll leave you with this. Europe is changing, the world is changing, it's moving fast, but it is up to each of us to become angel investors, I guess, and bring ourselves into the world of startups, because innovation is changing the world, it is making a big difference, and it is a really exciting time to be part of all of this and to be building the Europe and the world we want to be living in. Thank you so much, and thank you so much for being here.
Thank you.